So today we are in our fifth lecture of economy. In this series, we are covering all the topics from the perspective of mains only. So I am presuming that some amount of basic knowledge about all the topics you are already having. And monetary policy is something very important for prelims, not equally important for mains. Okay, it doesn't mean that it is not important, because this year also there was a question on food inflation. The question was on food inflation, but the answer will come from the monetary policy only. The question was like, why monetary policy is not so effective? If it is not, why it is not so effective in containing food inflation? Okay, so you got to understand both. First aspect, you got to understand some aspect of agriculture, how food production happens, and then you got to relate it with how monetary policy controls inflation. Okay. Incidentally, I miscommunicated yesterday that we shall not be covering inflation today, but you cannot cover monetary policy without covering inflation. Okay, so we have to study them by establishing the interlinkages only. So first thing first, what is monetary policy? Please tell me. First her, huh?
Measures taken by RBI to control or to influence the money supply in the economy.
Yeah, almost correct. Yeah, would you like to add anything?
It is a process of the component of economic policy in which central bank regulates the money supply demand.
So the key word is that money supply. It is the policy to regulate the money supply in the economy. And who does it? Central bank. Our central bank is RBI. Okay. The next thing is, what is this money supply? There are various measures of money supply, M0, M1, M2, M3, we study. So broadly speaking, there are two ways in which they are classified: narrow money, broad money. Okay. We need not go into that detail. Those are things which are important for prelims perspective. But broadly speaking, you should understand that the money which is there with the banks, if we consider broad money, it is the money which is there with the banks and people. So all the Indians, whatever they are having, this is called money supply. It could be with the corporate, it could be the individual, it could be the bank. But the money with RBI is not included in money supply. RBI is also having a lot of money, it prints money. Okay, so everything which is RBI is not part of money supply. Okay, except few exceptions. Okay, there are like some deposits that the banks have with RBI, they are counted in money supply. But in general, when we are going to understand the relationship of how money supply increases and decreases, we would have this convention that anything that comes out of RBI treasury is increasing the money supply. When the money is flowing from RBI to banks, money supply is increasing. When money is moving from banks or market to RBI, money supply is reducing. That's why I said that anything with RBI is not part of money supply. Okay, now to control this money supply, RBI has certain tools at its disposal. They are classified into two categories, that is quantitative tool and qualitative tool. Okay, what are the quantitative tools? Bank rate, yes, you are right. Repo rate, reverse repo rate, cash reserve ratio, SLR, open market operation, right? So these are the quantitative tools. What are these tools? If you could tell me, what is bank rate?
The rate at which RBI lends money to the banks
Against?
bonds, commercial paper, loan provided by RBI to commercial banks.
Yeah, it's simple. Like ideally, you should understand in this context that first we should understand repo. Okay, what is the repo rate?
The rate at which RBI gives money to the banks.
Yeah, so bank rate was also RBI was giving money.
Short term.
Yeah, so actually, see, you need to understand how banking operations happen. the banks are working on pan India level. Every day, a lot many people are depositing money, and banks are giving money, lending money also. A lot many people are withdrawing money from the banks also. So sometimes, if you see at the pan India level, it might happen with SBI that SBI has got deposit of 4 lakh crore rupees in a day. Then the people who reached to withdraw money from SBI, probably they demanded 4.5 lakh crore. There is this possibility that more money on some particular day. Now there is excess requirement of 0.5 lakh crore. This is called, this requirement, this is called lack of liquidity. That there is lack of liquidity with SBI. The amount of money that people are asking, SBI is not having that much of money. Okay. So RBI said that in case there is any lack of liquidity with the banks, banks can approach RBI and they can borrow from RBI. So this excess 0.5 lakh crore, SBI can go to RBI and borrow from RBI. But then RBI said that, see, when you give loan to anyone, you ask for collateral. So I will also ask for collateral. So you will have to give me collateral. As a collateral, what will you give? Government security. So this is how it happens. SBI gave government security to RBI. And this is collateral. This is not a sell of government security per se. Okay. And in return, RBI provided money to SBI. Well, this is always for to meet the short-term liquidity. There was short-term need of money to address this short-term need of money. This is not for expansion of business. Like if SBI has to open 30 new branches or 100 new branches, for that purpose also SBI will need money. You cannot borrow from RBI for that purpose. So this is only to meet this short-term liquidity need. Okay, banks can borrow from RBI by keeping government securities as collateral. Okay, now when this process was happening, when it is in effect, SBI is selling government security and taking money from RBI. At the time of this sale only, there is an agreement that say after 14 days, it would be reversed. After 14 days or 7 days, whatever be the period of repo operation, this process should be reversed. Reversed means RBI will return this government security and SBI will return the money. Okay, that's why the name repurchase obligation. Repurchase means today government securities are sold. Today only the obligation has been set that after 14 days it would be repurchased. Okay, that's why the name repurchased obligation. On some particular day, here also reverse can happen. That probably SBI got 4.5 lakh crore in deposit, but only 4 lakh crore were demanded by the customer. There could be the case of excess liquidity. Now, any excess money with the bank is a loss to them. And one more thing, if RBI has given money to SBI, it is not going to be for free. There is going to be interest payment, even for 7 days or 14 days, whatever be. Okay, this interest payment would be at the rate of repo rate. So repo rate, when I am using the word, it is reflecting the interest payment on this money. Repo operation, when the word is being used, it is reflecting the exercise of borrowing money by keeping government security as collateral. Okay, repo exercise, repo operation, and repo rate. Now, the reverse can also happen. Someday, SBI is having excess money. Now, RBI says that, okay, if you have excess money, that money also you can send me. Because see, SBI is having today excess money. Maybe PNB might be having less money. So what RBI will do? Take extra money from SBI, give it to RBI, to PNB or some other bank. Okay, so this is how this adjustment would be done by RBI. So RBI said that, okay, if you have extra money, that money also you can give me. Even if no one need money, RBI has the capacity to absorb that much of liquidity. So in case of excess liquidity, the operation will be reversed. In that case, what will happen? That again, RBI will give security and SBI will give money. This is reverse of the above operation. That's why it is called reverse repo operation. And the rate at this money would be reverse repo rate. Now apply your common sense and tell me, out of these two rates, repo rate and reverse repo rate, which is going to be higher, or both are going to be same? Maybe one is 4%, should other be 5%, 3%, 4%? Huh? Equivalent. Okay, anyone else? Achha, you are saying repo rate should be higher. Okay, why? It's more about money supply. Could you please elaborate? Hmm.
Money supply increases in the economy may leads to inflation.
So why should repo rate be more than reverse repo? The comparison is between repo and reverse. The question is this. So why should one be higher than the other? And if one should be higher than the other, which one should be higher?
Repo should be higher.
Why?
Because it increases money supply in the economy, which may leads to inflation.
So
That's why it should be higher.
Not many banks will approach RBI.
see, one more thing which is like mostly since it happens in our economy that inflation is the issue and RBI try to control the inflation. That's probably it's in our mindset that RBI should control inflation, but that's not always true, na? Sometimes RBI wants to increase money supply. When there is low inflation, you want, like immediately after the COVID, that was the approach taken by RBI. It reduced the repo rate. It allowed a lot of money supply to happen. So that's not always true. But something is always true. The relationship between repo and repo is always higher than reverse repo. Now see, if you look at from ethical perspective, ethics says that if I am giving money to you and I am charging you 4% interest rate, when you give me money to me, you should also charge me 4%. So ethical perspective, it should be equal. And like when I was teaching in the boys campus today, the student said that reverse repo should be more. Sorry, reverse repo should be more. Why? Because he applied probably equity principle that RBI is anyway a bigger player. So it should charge less interest rate. But economy does not run like that. Economy runs in the interest of the bigger player. Okay, here the capitalist people runs the roost. But there are other logic as well. See, repo rate is the rate at which money is being borrowed by banks. Okay, and reverse repo is the rate at which money is being borrowed by RBI. So in one case, RBI is getting payment, another case, RBI is making payment. Obviously, RBI will say that I will take more interest rate and I will pay less. So since RBI is framing the rules, this is how it will frame the rule. But suppose it frame the rule other way around. Suppose reverse repo rate is more. What can SBI do? SBI can borrow money. Suppose reverse repo rate is 4% and repo rate is 5%. What can SBI do? SBI can borrow money at 4% and then lend the same money to RBI at 5%. So without doing anything, SBI can make a lot of profit. So that's why this scenario is definitely not a good scenario. RBI wants that only the excess liquidity you should park with me. Okay, so that's why it has less less reverse repo rate and more repo rate. Only the excess liquidity. And one more thing, This operation is being done for the benefit of banks, at the initiative of banks. Since banks have excess liquidity or lack of liquidity, banks are going with RBI. So that's why this operation should be in the favor of RBI. Is it clear? That is making economic sense. Now, suppose this is the scenario where you were having some collateral. This money exchange is happening for some collateral. Whereas in case of bank rate, there is no collateral. Banks can borrow from RBI at bank rate. Okay. Bank rate has multiple uses. I mean, earlier, nowadays, repo rate is the most prominent policy rates. But earlier, bank rate was the most prominent rate. So earlier, bank rate was acting for various purposes. Nowadays, it is mostly a nominal thing. Usually, banks do not borrow from RBI that much. I mean, beyond their liquidity adjustment requirement. But bank rate, banks can borrow from RBI. Second utility of bank rate is it is used as a rate for rediscounting of bills. Okay, you may write it as well. What is rediscounting of bills?
Corporate bonds.
Not exactly corporate bond. Corporate bond is slightly different thing. See, corporate bond is when corporate needs money, they can float a bond. Okay, so this is kind of unsecured loan given to corporates. Okay, Reliance is simply coming that you give me money, I will give you a piece of paper that yes, I have taken money from you and I will pay you interest 5%. Suppose Reliance fails, you have nothing. Okay, so it can be issued by big corporates only, on whom people have a lot of trust. Reliance and Tata, they are enjoying a lot of trust. People can invest in their bond. Okay. When Reliance and Tata will approach the banks, bank will ask for collateral. Bank will not give loan that way. But bill is slightly different. Bill is, I mean, it is full form is bill of exchange. Okay, so bill of exchange usually happens when there is a business transaction. When one supplier has provided some goods to other businesses. In that case, normally what happens that I will give you the goods, you will give me the money. But usually when the large quantity of goods are bought or sold, in that case, usually you do not have money immediately available. You will try to sell this money, then you will get money, then you will make the payment. Like suppose a wholesaler is buying good from a company, he will buy good of say worth rupees 1 crore. His margin is only going to be, profit is only going to be 5% or 10%. So out of this 1 crore worth rupees good, he is going to sell this 1 crore worth rupees good and he is going to get 1 crore 5 lakh. Okay. So, I mean, it will not make sense to have 1 crore cash reserve available. So usually what happens that you buy good on credit, you issue a bill of exchange. You write on a piece of paper that I have taken money this, and on a future date, maybe 1 month's time, this is something that is payable. Okay, so on a future date, the person, the supplier will not come to the buyer and ask for the money. Rather, he will directly go to the bank and take the money. This is called bill of exchange. Since there has been an exchange of goods, the exchange of money will happen on a future date. Is it clear? Now, in between, it may happen that future date was probably 1st of January 2025, but the supplier needed money before that. It is always possible. So what will happen that he will go to his bank and say that, see, I am getting this much of money on so and so date, but I need money today. So you take this bill, you take money on that date, you give me money today. So obviously bank will say that since I will get money after 1 month, so I would have to pay you, deduct the interest rate for this 1 month period. The value of 1 crore today and value of 1 crore 1 month later is not same. Whatever be the interest, so at some interest rate, bank would charge. Okay, so in place of 1 crore, maybe the bank will give him 99 lakh only. That 1 lakh is your interest payment for this 1 month period. Okay. This is called bill discounting. Why this term bill discounting? Because there has been some discounting on the amount of bill. Rather than paying 1 lakh, 1 crore, banks have paid only 99 lakh rupees. Now it may happen that before this 1 month expiry period, banks are also in need of money. There is a possibility. So what will bank do? Bank will go to RBI and say that, see, this is the bill of exchange I have. You will get money after 1 month. You take it, you take money after 1 month, but please provide me money today because I need money today. Bank is saying to RBI. RBI says that yes, I will do the bill discounting. But since it is already a discounted bill, which is being discounted again by the RBI, this is called bill rediscounting. Rediscounting means being discounted again by the RBI. Now RBI will say that rather than paying you 99 lakh, sorry, 1 crore, the value of bill is 1 crore. So RBI will discount it using bank rate. So it's 1 month, whatever be the discount of 1 crore using bank rate, maybe 99.5 lakh is the amount that RBI will give to the banks. So banks will definitely discount it at a rate higher than bank rate because they know that they can discount it at bank rate. So if bank rate is suppose at any point of time 7%, the SBI will discount it at 9% or so. Okay, and even usually these people are also smart. The supplier. So if the worth of good is say 96 lakh, since you are paying me after 1 month, if you make today, it happens very often. If you make payment today, you have to pay 96 lakh. If you make payment after a month, you have to pay 1 crore. Something of that arrangement is there. Okay. So this is bank rate is used for rediscounting purpose. Another purpose for which bank rate is used is for imposing penalty on banks. RBI also imposes penalty if banks fail. So for all those purposes, bank rate is the standard rate used. Okay, clear? Next is cash reserve ratio. What is cash reserve ratio? CRR?
Percentage of the public deposits which the bank has to keep with RBI.
Yes, absolutely right. It is the percentage of total deposits, okay, that the bank has to keep with RBI. Why?
To meet the liquidity crisis.
But liquidity they have already met, na?
What future,
To adjust?
future, any demand?
Sort of your.
Liquidity money supply.
Yes. See, there is one more factor that is called money multiplier. Do you know it? Can someone explain?
If interest rate decreases, people will borrow money. Therefore, demand for goods increases. Therefore, it is a cycle. That is human.
That's the beauty of economy. Everyone understands, but the basics are somehow uh, slightly missing. Because this is what you study in newspaper always. Hmm. Okay. See, money multiplier. What you are saying is a simply demand cycle that people are demanding money. Money multiplier is suppose there was a person, Mr. A, he deposited 100 rupees in bank. Now, what will bank do with this 100 rupees? Bank has to pay interest on it also. So bank would immediately find another person, Mr. B, and lend this 100 rupees to that person. Okay. Suppose now this 100 rupee went to Mr. B. Ideally or normally it happens that if you have taken the loan, where will you take the loan? In your deposit account? From your loan account, money will be transferred to your deposit account. And suppose using this money, you have purchased something. Suppose you have purchased a car. So ultimately, the money will transfer from your bank account to the bank account of, say, Hyundai. So overall, the money will remain in the banking system only. Effectively, this person again went to the bank only and deposited this 100 rupees. Now, bank said that I have got another 100 rupees as deposit. So bank will further lend it to another person, C. Now C has again C went and bought another goods. Suppose he bought the car of Maruti. Maruti also has money in the bank. So again, the same money is again with the bank. Actually, there is only 100 rupees, but in totality, if suppose it is moving around, say 10 times, the bank is having 1000 rupees at deposit as deposit. 1000 rupees, everyone like B is also saying that I have 100 rupees in my bank account. A is also saying that I have 100 rupees in my bank account. C will also say that I have 100 rupees in my bank account. So this is how banks multiply the money. This is an important function done by the banks. Actually, there is only 100 rupees, but that has been multiplied multiple times through banking network. Now, this cycle can go on forever. Now, there is a risk. If this multiplication process is very fast, it can increase money supply in the economy at an alarming rate. So this is like a nuclear reaction. You want nuclear reaction to happen, but you want it to be controlled, otherwise it can be a bomb. Okay, so RBI does not want this money supply to be going on infinitely in an uncontrolled fashion. So what RBI says that when you get 100 rupees as deposit, if you are a bank, a part of this 100 rupee you will keep with RBI. That part is known as CRR. So suppose 4 rupee is kept with RBI. Now bank can only lend 96 here. Only 96 is coming here. Out of 96, again RBI said that 4% you have to give to me. So maybe for sake of simplicity, I am saying that 4 rupee will again go to RBI. Next time it would be only 92. Next time it would be again 4 rupee with RBI, it would be 88. And so in every cycle, this money is reducing. Ultimately, it will go on to become zero. So this would not be an infinite cycle. Okay. This is an important function of CRR. This is why CRR is there. So CRR is there to control the money multiplication, to control the money supply in the economy. Well, then, if RBI has got the money, it has other utilities as well. Because see, RBI is the banker of the last resort. If banks are not able to find money from anywhere, they will go to RBI and get the money. So for that purpose, RBI should have money. This money is again used for that purpose. Since RBI is the banker of the last resort, it uses this CRR deposit to provide money to the banks. Clear? Does RBI pay interest rate on CRR? No. This is a cash. It is like cash. That's why the name cash reserve ratio. If you are having cash in your purse, you are not earning any interest rate. But the same cash deposited in your bank, you will earn interest on it. But the interest is so low that we do not feel it. In my childhood, interest rate used to be very high. I remember there was a time that was when I was at that point of time, maybe seventh at a standard or something like that, my father used to uh, get on those days. Even today, it must be happening. When you do the FD, bank used to give you a piece of paper, very beautiful colored, and that you have deposited this much of money, and this is the interest rate. On this day, you will get this much of money. And at that point of time, 7 year used to be the time in which money used to get double. So if money is getting doubled in 7 years, the interest rate must have been something around 9% or so. These days, interest rate at best is 7%. FD interest I am talking about. ठीक है. When you go and borrow from bank, then bank will charge you 10%, 12% or so. Okay. What happened? Next is SLR. What is the purpose of SLR? What is SLR first?
Percent of public deposits which the bank have to
Maintain?
themselves.
Maintain in liquid asset. You may write it down. Percentage of total deposit that the bank has to maintain in liquid asset like cash, government security or gold. That's why the name liquidity ratio. A statutory because this is required by the RBI, required by law. What's the purpose of having SLR?
To avoid liquidity crisis.
Yes. Should have liquidity so that there is no liquidity gap. Liquidity crisis means when a customer has approached the bank asking for money, bank should have money. If the bank does not have money, what will happen?
People borrow.
People will borrow. That's not the big problem. Let them borrow.
Trust.
Yes, the trust on the bank will go down. I mean, suppose you approach the bank, I mean, you would not be a single person who will not be offered money because bank is not having money. Bank is not giving you money because bank does not have money. It means you will tell all your friends that, oh, as soon as in the very first instance, tomorrow morning, go stand in a queue and get money out of that bank. Okay, and I have just told you that actually there was only 100 rupees. That 100 rupee has been converted into 1000 rupees by the bank. So at max, bank can give 100 rupees. Na? At best, bank can only give 100 rupees because there was actually only 100 rupees. But there are 1000 people are claiming that in this bank we have 1000 rupees. So if every customer of the bank approaches the bank to take out his money, bank can never pay him. Also because bank has given this money to a lot many people. Bank does not have this money with him. So it will always be true for all the bank, irrespective of their strength. SBI is such a big bank, but even if all the customer approaches today to the SBI, please give me money, SBI will say, I don't have. But why would everyone approach? This is the basics on which banking system is working. So we should have some amount of liquid cash to meet the need of the customer, to meet the demand of the customer. Another purpose of a statutory liquidity ratio is to facilitate government borrowing. Like you can have SLR in the form of government security also. Since you have it in the form of government security, it means it will always make sense for the bank to have less of cash and more of government security, because in cash they are not earning anything, and government security they will earn interest, 6%, 7% or whatever. So if SLR is high, bank would be going to buy government securities. Then if banks are interested in buying government security, government can take loan or raise money at less interest rate. Is it clear or not? That the rate of interest for the government would be less. Are you getting it? Pakka? You are not writing anything. Keep writing na. At least teacher gets the confidence that you are understanding. It is not important where you understand or not. It is important that there should be a feeling that yes, we are understanding. Feeling is more important than actual thing. There was a student, few days ago, she approached me, not of Narayana, other student. And she said that, sir, last year my preparation was very good. I mean, I was preparing from my college days only, and after that, like I had taken test series also. I was getting good marks in the test series, 100 plus marks she was getting in the test series. Then I appeared in UPSC and I got only 60 marks approx. So what happened? She said, "The sir, actually, I mean, I was under so much thing since childhood. I wanted to prepare for the civil services. So there was a lot of pressure. I was literally feeling the pressure. This is her word. I'm not putting words in her mouth. She said I was literally feeling the pressure, and that there was a lot of pressure. And so because of which, on the exam time, I could not solve those questions which I know. There were very easy questions of polity, economy, those questions. When I came back home, when I was looking at the questions with my peaceful mind, I was able to solve them. So the feeling of that confidence she never got. That she's confident she can clear this exam very easily. Because of that lack of confidence, she was taking a lot of pressure, and because of the pressure, all things went wrong. So you should not take pressure, you should have the confidence. Confidence will come when you write. Next thing is facilitate government borrowing. So government always wants that the interest rate should be less, and also the government wants that money should be easily available. Since fiscal deficit of the government is always going to be there, this is one way through which like RBI is facilitating that. Okay. Next is open market operation. What is open market operation?
Not the sense of purchases, it's government securities and financial markets to influence the money supply.
So it's simple. The same government security, central government can buy and sell at any point of time. So repo operation, the banks were approaching the RBI when they were having less of liquidity. But sometimes RBI can also feel that there is more liquidity or less liquidity in the market. So if RBI wants to take out the liquidity, then RBI will use open market operation. Okay, so it's sale. If you want to write, you may write. It's the sale of, and if you have it in notes, no need to write. It's simply sale of government securities in open market to adjust liquidity. Then there are some qualitative tools. What are the qualitative tools? First is credit rationing. For example, priority sector lending. What is the priority sector lending target? Yes, 40% overall. For agriculture, 18%. There is a sub target as well. Okay. So credit rationing is when RBI instructs the bank to increase or decrease lending in particular sector. So earlier tools were called quantitative tools because they were controlling the quantity of money supply in the economy. These are called qualitative tools because they are not changing the money supply, they are changing the quality of money supply, the quality of credit. Like how much loan you have to give, that RBI is not saying anything, or what is the rate of interest, RBI is not impacting that. What RBI is saying is whom to give loan. You should give loan to farmers. Okay. Next is variation of margin requirement. What is this? Suppose you want to buy a car. The car is worth rupees 20 lakh. You go to the bank to please me give me loan. I want to buy a car. Bank will never give you 20 lakh rupees. Bank will say that I will only give you 16 lakh, 80%. Then you say that okay, I will buy another car which is worth rupees 16 lakh. The bank will say that then I will give you only 14 lakh rupees. Okay, so there is always going to be a margin requirement. Okay, this is called down payment. Why is it done? It is just to ascertain that you have the repaying capacity. You should have some money of your own also for anything. Not everything, like complete initiative cannot be of borrowing. Okay. What RBI does, like suppose RBI want that probably people are buying a lot of two-wheelers and they are not buying four-wheelers. So RBI will instruct that increase the margin requirement for two-wheelers and reduce for four-wheeler. So now, suppose margin requirement for two-wheeler has been increased to 40%, and for four-wheeler it is only 10%. People will have more tendency to buy the four-wheeler and less tendency to buy two-wheeler. So this is how the quality of credit can be adjusted. Getting it? Because initial, not everyone will have all those money, initial payment. You know, there was a person in NABARD, he did something very smart. NABARD also has this policy. NABARD gives loan to its employees. Okay, so it also has the policy of margin requirement of 10%. So a person went to NABARD and he finalized a car which is worth rupees, say 10 lakh rupees. NABARD said that I will give you loan of 9 lakh. He said that I don't want to spend my 1 lakh rupees. So he went to the car dealer and he applied his mind that see, I will get a quotation worth rupees 11 lakh. Okay, and then 90% of 11 lakh, 99 lakh, 99, I mean 9.9 lakh, I will get. Okay, he got the quotation of 11 lakh. He submitted it. NABARD sanctioned the loan. But I mean, when you actually purchase the loan, purchase the vehicle, actual bill cannot be of different amount. Na? Initial estimate can be of any amount, but the actual bill has to be of the actual payment. So actual payment came of only 10 lakh rupees. In the very next month, NABARD withdrew 1 lakh rupees from his salary. The additional 1 lakh rupees that he has taken. Because you have to pay your margin requirement. This is as per RBI regulations. Next is moral suasion. A lot of moral gyan, etc. also RBI keeps on giving. For example, RBI is saying the banks these days that do not give unsecured loan. You are very liberally distributing the credit card. Please do not do that. Persuasion, advisory, etc. RBI advisory is, I mean, if you work in the banking sector, RBI advisory keeps coming every week. RBI write a letter to all the banks. Then sometimes banks will listen to this advisory, sometimes they will not listen. So there can be a direct action as well. Okay, for example, prompt corrective action. RBI has, like we have studied in election that election commission has got plenary power. It can do anything to make sure that there is free and fair election. Similarly, RBI has got almost unlimited power in banking sector. It can do anything with the bank. It can change the director of the bank. It can shut down a bank. It can reduce the salary of the promoter of the bank, director of the bank. Do anything. It can ask two banks to merge. Okay, literally all the unlimited power RBI enjoys, but it is not flowing from Constitution. It flows from the RBI Act and Banking Regulation Act. These are the two acts that deal with the RBI powers. Clear? Any doubt with any of these qualitative tools? Next, we are going to see how does monetary policy control inflation. You tell me. If RBI has to control inflation, what should it do? Increase?
Percentages of SLRs.
Okay, what you are saying?
By decreasing money supply and
Okay, both are saying the same thing. Okay. So ultimately, to control inflation, there should be less money. That's the ultimate agenda. Okay. So one thing it will do is through these rates, CRR, SLR, repo rate. Incidentally, for the good luck of us, they all work in the same direction. Okay. If like objective of RBI, if I have to control inflation, is to reduce money supply. Now, if CRR is the easiest one to understand. CRR is simply the money will come to RBI. So if CRR was earlier 5%, RBI increased it to 10%. The additional 5% money will go to RBI. It means it has gone away from the market. So RBI will simply increase CRR. Similar fashion also works the repo rate. Suppose repo rate increases, what will happen? The loan would be costly. Less people will take money. It means money supply will reduce. If SLR increases, what will happen? Bank will have less money to lend to normal consumers, businesses, etc. Rather, bank will either have more cash or more government security. So in this way also, the money available with the businesses, with the people, that will reduce. So all these three will have the same effect. If it increases CRR, SLR, even bank rate. Bank rate is also rate at which rediscounting is happening or a rate at which banks are borrowing from RBI. Okay. So all these three, if they increases, inflation, monetary policy will go down, sorry, money supply will go down and inflation will reduce. When inflation is already low, like RBI has got the inflation target of, what is the inflation target of RBI? The target is 4% with the range, with the band of 2%. So 4 plus minus 2%. Between 2 and 6, RBI has to keep the inflation rate. So suppose inflation is 2.2%. RBI has to take it to 4%. So in that case, RBI will reduce these things. If they are reduced, money supply will increase. Money supply will increase. It will lead to more growth, liquidity, purchasing power. There is one more thing that is called Phillips curve. Do you know what is this? There should be a chair here, na? Where is it gone? Okay, कोई नहीं बोला. What is Phillips curve? The curve drawn on the Phillips radio. Phillips curve gives us the relationship between inflation and unemployment. Write it down. And it says that unemployment and inflation have inverse relationship. So if you want low inflation, when the inflation would be low, then unemployment would be high. If you want low unemployment, then inflation would be high. So either of the two pain you have to suffer. In economy, you don't have choice. Either there would be unemployment or there would be inflation. Now here, unemployment, so can I say that inflation is inversely proportional to unemployment? Can I write that? This curve is simply depicting the same thing, that they will move in opposite direction. Can I say that inverse of unemployment is like employment? And here, employment or unemployment is used as a proxy for growth. Okay, when there is high growth, yesterday also we have seen a reason for unemployment. We saw that, right? Yesterday or the day before yesterday class. that in case there is a business cycle, when there is lack of growth, recession, contraction, in that phase there would be unemployment, cyclical unemployment. We saw that, right? So high employment would be, it means there would be high growth. So this curve also says that inflation and growth will go hand in hand. If you want growth, you will have to have inflation. It is, so that's why inflation is like to be had in moderate quantity. Okay, a little bit of inflation is good for economy. So someone says that inflation is bad, object to him that no. You got to qualify how much inflation is bad. So that's why we do not want that inflation should go below 2%. That is not going to be good. Now, do you understand this relationship, how this inflation creates growth? In the beginning of the class, someone has said something like that. How inflation creates growth? How we are saying that some amount of inflation is good for the economy? How?
Increasing money supply, demand was increases. Therefore, economy grows.
Increasing money supply, there would be more demand. Huh. Right? So to meet the extra demand, there would be extra supply, extra production. Extra production is actually growth. And when there would be extra production, there would be more wage payment. I mean, there are various factors of production. There will be more payment to those factors of production. Then again, people will have more money. When people will have more money, they will further create more demand. There will be more inflation. And again, this cycle, this is virtuous cycle, which will keep on continuing. So that's why a moderate amount of inflation is required. I might have told you that in Japan, there was a time period when they were having negative inflation. Okay, and that point of time, I mean, that prime minister has been shot dead now, Shinzo Abe. Shinzo Abe. Okay. So he had come to power by making this promise that I will bring inflation in your country. You know, in India, if someone promises this, I will bring you inflation, people will never vote for him. So it depends on the context. There was no inflation, which was also not good. He promised that he will bring inflation. Next, with open market, see, this is also, you can see that in this period, before COVID had come in 2020, before that only we had started witnessing sluggishness in growth. In 2019, we were already having slow growth rate. So to increase growth rate, RBI has started reducing the repo rate. In 2020, the matter was worse. There was no growth at all. There was negative growth rate for the first time. So in this period, RBI kept the interest rate at minimum level so that there is more money supply. After a year of a lot of pumping of money, there was excess money supply in our economy. So when in 2021 or when in 2022, we started witnessing the impact of excess money supply, when there was high money supply, there was high inflation, RBI had to increase interest rate. Okay, and even today, interest rate is high. That's why the repo rate is towards higher side in last 2 years. So you can see whatever we are studying theoretically is also being in sync with the practical action of RBI. You need not remember all the data, but some rough data for last 2-3 years you should remember. Sometimes it would be useful. You can make this rough diagram as well. Okay. And like, do you read the newspaper when monetary policy committee meetings happen? There is a statement by RBI. Those things you should read. Okay, so when in last monetary policy committee meeting was happening, the interest rate has moderated to some extent. Sorry, inflation had moderated to some extent. It was between 4 and 5. Okay, so a lot many businesses etc. they were making this demand. Probably RBI should now start reducing this repo rate or interest rate. Okay, but the job of RBI is not that easy. RBI has to project the future inflation as well. RBI do not have to take action as per the last quarter. Because what have to do with last quarter? You whatever be the interest rate, its impact to be visible in the next quarter. Okay, so RBI has to project the future inflation. And as per the RBI projection, and projection is always going to be subjective. Whatever you may make the projection, it may or may not fructify actually. So as per the RBI projection, the inflation was not going to be decreasing. So that's why RBI governor said that rate cut we should not do as of now. And his apprehension were proven right. Last month inflation has gone up. It has reached around 5.7 or 75, 5.75%. Okay, so there is no rate cut on the card. Now the question here that comes is, why do businesses want less interest rate?
So you can borrow.
Yes, you are right. Because businesses borrow money. I mean, Adani example I have taken yesterday. Adani empire is built on borrowing. So if I have to borrow, I want the interest rate to be low, as low as possible. And when 0.25%, 0.5% matters, when I am borrowing 1 lakh crore rupees, I mean 1000 crore rupees is the tune of borrowing, every point matters. Okay. There is one more tool that controls inflation, that is open market operation. Here it's simple. If RBI has to control inflation, it should take money out from this market. How can it take money out? It will sell government security and it will take money out. Okay. And
There are banks obligated to buy those government securities.
see, technically no, but practically yes.
What is the benefit?
Hmm? The benefit is that they do not want to be on the wrong side of RBI. Okay, RBI is like their parents. So if RBI want that money supply should reduce, bank will oblige. Okay, but yes, technically as such there is no compulsion that they have to borrow when there is an open market operation. Okay. But like RBI issues notice in advance that on these days I am going to do this much of open market operation. So banks are always ready that RBI is doing it, we have to go for it. Reverse of this, when RBI want to increase money supply, RBI will RBI will buy government security. In this way, money will come to the banks. Bank will further lend this money to the public. Interest rate will also go down. When there is more money supply, interest rate would be less. When there is less money supply, interest rate would be high. Now, so if a question is there on simply controlling inflation, all these tools you must mention, or you should also mention how these tools are going to impact money supply and then inflation. So this correlation also you must explain in very lucid manner. Okay. Now the question that is being asked recent time is about food inflation. Okay. So before we move further, can you tell me what is the difference between core inflation and headline inflation? Here the word that is used is core inflation.
Fuel is also there.
In core inflation, fuel is also there. Anyone else? Hmm. Please tell. So see, how is inflation measured? So to measure the inflation, there is an organization NSO. This is the organization which measures inflation. So it is not possible for this organization to go and look at all the commodities which are being sold, because of, for few commodity price will go down, for few commodity price will go up. So it takes a representative basket of all the commodities that are being sold in the economy. Okay, so it has a basket, it has all the goods and services, and like it for example, as a representative of furniture, like furniture have table, chairs, bed, etc. All the furniture, maybe it can take, I'm just giving an example, it can take chair as a representative of all the furnitures. So furniture sector, like overall people consumption on furniture is on an average 2% of total expenditure. So the chair will be given 2% weightage. If the chair prices increases by say 10%, it would be assumed that all the furniture prices have increased by 10%. Okay. Now this is how there is a basket. Okay. Now in this basket there are food, fuel, manufacturing goods, services, everything is there. But it was seen that in India the inflation in food and fuel is way higher. Okay, because of some peculiar nature, we will come to it. For fuel, you understand that India is dependent on import, and when in the global market the crude oil prices will go up, the prices of fuel will go up in India also. So that's why there is a lot of volatility in their prices. So because of their inflation, the overall total inflation also we see that very high in our country. Whereas if you practically go into the market and look at a lot of commodities, for example, the Maggi prices, it will not happen that tomorrow it will go on, yesterday it was rupees 10 and tomorrow it was 20. It will never happen, unlike tomato. Tomato, today it might be rupees 20 and tomorrow it might be 40 and day after tomorrow it can 100. Okay, the same does not happen in manufacturing goods. In most of the services, for example, the transport, it does not happen that metro prices will all of a sudden be doubled or it will go down. This is not how it doesn't work. Okay, so an idea came that probably we should be tracking the core inflation, avoiding the in this basket, avoiding the food and fuel. So the basket of goods that we are tracking, if it excludes food and fuel, that inflation is called core inflation. And the normal inflation was called headline inflation. Then we are not using any word inflation, we are actually meaning headline inflation. Headline inflation is including everything, including all the goods. Right? Now, as you can see in this data, that core inflation has been coming down. Like it was high in financial year 22, almost remained at the same level. We have seen that RBI increased interest rate in financial year 23, and then as a result in financial year 24, it came down as well. However, food inflation has been on increasing tendency, although RBI has increased the interest rate and repo rate. What explains this? Why are we witnessing increasing food inflation despite RBI action?
Supply chain issues.
Yes. Anything else? That's right. Anyone like to add anything or elaborate? Climate change, seasonal variation, not completely true. Reason being, when we measure inflation, we compare it with last year prices. Were you in my CSET class? Any one of you? CSET class, I have taken a few CSET classes. I did take for TGPSC people. You are Andhra people. Okay. So, see, when we compare inflation, when we are saying that inflation in August 2024 If the price in August was 100 rupees, we will compare it with the price in August 2023. So if it was 95, this is how inflation would be calculated, 5% or something like that. It might be the case that I would again say that there is 5% inflation. It might be the case that before this, in July 2024, the prices of something was rupees 120. So practically you will see that the prices have gone down. Okay, but still statistically you will say that there is 5% inflation. In fact, sometimes the scenario is a bit more weird. Sometimes it so happens that last year it was only say 50 in this month. So prices have come down from 120 to 100. Still, statistically you will see that there is still 50% inflation. There is very high inflation. Although you will see that now the tomato prices have come down. Last month it was very high. Okay, so these things, this anomaly happens because statistically we compare with the last year prices because of adjustment of seasonal variation. Because see, if you look at the tomato prices, especially food prices, they have seasonality. There would be a few months when tomato prices would be very high, and then there would also be a month where farmer would be simply disposing of their tomatoes on the road because they are not getting due prices. Okay, so when there is what you say ripening season, then you get tomato prices get very down, so down that it is not remunerative for the farmer, and then after a month or so, we have very high prices also. Okay, but there are some other reasons. So let's first understand causes of food inflation. Hmm? Most important causes are usually drought, flood, etc., the climate related factors, and these are being exacerbated by climate change. Economic survey says that the agriculture productivity have reduced by 15 to 20% due to climate change. Due to climate change, agriculture productivity has reduced by 15 to 20%. Like last week I was in my hometown on Chhat Puja. So this year, no one was wearing sweater on Chhat Puja. Usually this time, I mean, Chhat Puja happens in the month of November only every year. This is routine for every year that people will be wearing sweater. There will be a little bit of cold in this time of the year. Not in Hyderabad, but in my eastern India, in Patna. But this year, the winter is delayed. And this is a pattern nowadays that all the seasons have got delayed in India. The monsoon is also delayed. Monsoon comes late, goes late. Okay. So this has impact on sowing of the Rabi crops because Rabi crop cannot be sowed until there is a little bit of winter there. Okay, so if sowing of the crop is delayed, it will ultimately also result in less production. This cycle is disturbed. Okay, when in the summer rain will come, some amount of rain that will happen because of the western disturbances. At that point of time, your seedlings are not ready. Next, crop diseases are there. Last year, tomato prices were high because of some spread of tomato pest in Karnataka region. Then slower sowing in Rabi season. That's also a reason because of the climate change. Also, it is happening. There is high input cost. Like this year, you must be reading in the newspaper that the fertilizer prices have gone up. So, because they are also dependent on the global fuel prices. Source of fertilizer is the natural gas. So, if natural gas prices goes up, the prices of fertilizer also goes up. And then there is another thing, inelastic demand for essential commodities. What is this inelastic demand?
Even though the price increases, demand won't increase.
Hmm. right? So inelastic means something that does not changes. So even if, like, the law of demand says that if price goes up, the demand should go down. There is inverse relationship. But essential commodities are those for which you have to consume it, like food. Even if the price goes up, you cannot stop eating one bread less from tomorrow. If you are eating three breads, you will eat three breads, even if the price of bread goes up. What you will do, you will, in place of the paneer vegetable, probably you will start buying potato vegetable. But you will not reduce the consumption. So, food products are a kind of essential good. Since they are essential, people purchase them even if their prices goes up. Now this explains why we have a lot of price volatility. See, these are supply constraint. These are the supply side related issues. So even if because of the say crop disease or because of the drought or flood, etc., the supply is less. So because of the less supply, the prices will go up. But even if prices has gone up, the consumer is still making the demand. So effectively, the prices will shoot a lot. Because the demand has not changed, the supply has reduced, demand is still there, the price will further reduce. That's why we see that there is a lot of price volatility, and there is a term used that we witness skyrocketing prices. कीमतें आसमान छू रही हैं. The prices touch the sky. And then at these point of time, a lot of anti-social element also become active. They do hoarding, black marketing, etc. And the government also plays its role. MSPs are increased every year because of the political reason, sometimes because of the real reason, right reason. So these factors increase the uh, prices of agriculture commodities, because of which we see a lot of inflation in food prices. Now here, after writing these factors, that what are the food inflation, you can always see that, see, most of these factors, or rather all of these factors, are related to supply side. There are two causes of inflation. One is called cost push, another is called demand pull. What's the difference? What is the difference? Okay. So, like, inflation is because there is this balance between demand and supply is disturbed. Now, this balance can be disturbed if there is more demand or if there is less supply. When RBI uses its monetary policy tools, RBI controls demand. RBI is reducing money supply. By reducing money supply, RBI is reducing demand. Okay, now these two factors come into play. First, since they are inelastic, you cannot reduce the demand. Even if I have less money, I will eat. We cannot stop eating food. But well, what I can do, if interest rate is high, I will not purchase new shoe. Maybe I can use the same shoe for one more month. Maybe I will not purchase the new mobile phone. I will rather go and get it repaired. These are the adjustment that people make. People will not stop eating because this is an essential item. Food, medicines, fuel, these are essential items. Okay, so first this factor will come into account. Second, also the reason is most of the reasons are here in the supply side. So because of the two factors, the RBI monetary policy is not effective in reducing food inflation. Is it clear? Have you written it? ठीक है? Write some fact. as per economic survey, 50 to 60% of inflationary pressure 50 to 60% of inflationary pressure on food are supply driven. There is one more reason why RBI monetary policy fails is because some commodity prices are dependent on import. For example, oil, edible oil, pulses. So since these are the commodities which are mostly imported, it's beyond the control of RBI. To that also you add that the prices of commodities like wild seed and pulses are globally determined. So, what's the way forward? What should RBI do then? So, RBI can't do much. We have concluded that in case of food inflation, RBI's role is going to be limited. In fact, in this context, there is one school of thought that also says that probably the inflation target of RBI should not be of headline inflation, CPI, which we call normally, rather be of core inflation. That since you should try to control the controllables. You cannot control food inflation. Why are you trying to control? So this is one school of thought. Obviously, this is not the currently accepted thought. The counter argument is that if you only target the core inflation, probably the overall inflation can go out of control. Because whatever people are feeling, they are feeling the overall inflation. So if you cannot control the food inflation, that is the time when the other goods inflation should be controlled, so that overall inflation is matlab, in our acceptable bandwidth. Okay, so this is not accepted, but this is one view. Another suggestion that in the way forward that you should write is that fiscal policy should also be tuned to control inflation. Write it down. See, all these supply side constraint. One reason is there is high input cost. How can it be reduced? Through fiscal policy. Government can give subsidy on input products. There is hoarding. How can it be controlled? By government action. There is a lot of import of wild seeds. So government should take a steps to increase the wild seed production. There is high MSP. Government should not increase MSP. So yes, the policy action on the part of government should also be tuned towards controlling inflation. Probably government has more role to play in controlling food inflation as compared to RBI. RBI can't do much. Okay. And one suggestion you should always write: agricultural productivity is very low in our country. Unless you increase agriculture productivity, food inflation is going to be there. And then probably in APPSC only, I was seeing this case. Was it asked some year that why is it the case that despite high food inflation, the farmer's income is not increasing? Normally, if like the products, for example, at some point of time when petroleum prices increases, the oil marketing companies make a lot of profit. Because see, even if my profit is fixed, that I will make 10% profit, The 10% of at one point when the prices are low 10% of rupees 100. When the prices are high, the 10% of rupees 200. The 10% of rupees 200 is definitely going to be higher. Isn't it correct? Like during the festival season, when there is a lot of consumption of sweets, sweet prices increases. Those people involved in sweet business, they make a lot of profit. Why the same is not happening with farmers? Why are farmers' income not increasing despite increase in food prices? Yes, you are right. Input cost is also increasing, so actually the profit is not increasing. That's also correct. So now here there is one stat by the RBI. RBI has recently conducted a survey. In that survey, RBI said that there are two kind of agricultural commodity. One is perishable, like fruits and vegetable. Another is non-perishable, like pulses, food grains, etc. The inflation is mostly very high in perishable commodities. The inflation in non-perishable commodities are mostly subdued. High inflation we always witness in tomato, potato, onion. Okay, so the high inflation in perishable commodities, and there is one more thing that RBI added, that in case of perishable commodities, only 30% of the price paid by consumer reaches to farmers. Whereas in case of non-perishable commodities, it is approximately 67%. So if you are buying fruit worth rupees 100 rupees, only out of this 130 rupee will go to the actual producer who was producing this fruit. Whereas if you are buying rice worth rupees 100 rupees, out of this 100, probably 67, 70 rupees will go to the actual farmer who are producing the rice. Now, this is the area where less money is reaching the farmer, and this is the area which is witnessing the inflation. So that's why farmers are not getting their share. Now we need to ask the next question, why is it that we have high inflation in perishables? Or rather, you can answer this question also, why is it that in case of perishable, farmers are receiving less money?
Lack of cold storage facilities.
Yes, that's correct. So lack of cold storage as well as cold supply chain. See, in India, if a tomato is reaching your plate fresh, it's a coincidence. It's God's grace that it did not get damaged in the transportation. It's not human intervention. In humanly, what we are doing, we are simply dumping all the tomato together in the big truck. Then the truck is bringing it to the market. Then from the market, it is going to the further your regional market, and somehow it is reaching your house. Somehow, luckily, it did not get damaged. Otherwise, in the process, around 20 to 25% of the perishable commodities get damaged or wasted. The loss food product wastage is so high in our country, whereas in developed countries that's not the case. Their trucks which are carrying the perishable commodities are often refrigerated. They make arrangements so that there is minimum wastage in transportation. Okay. Now, one thing is that because of high wastage, those intermediaries which are involved in selling or reselling of these products, they will have to have high margin. If I mean, think from the perspective of that vegetable seller, he knows that the 20 kg vegetable that he is buying, ultimately he would be able to sell only 18 kg. So he has to account for this 2 kg loss. So he will always keep prices very high. So because of this, the margin of traders are high. in case of perishable. The same is not the case in case of rice. In case of rice, if someone is buying 20 kg rice, he will sell 20 kg rice. So he will simply add 10% his margin. Whereas here he will take account of 2 kg wastage also. So he will have 20% margin in case of perishable. Okay. Another reason is, look at here. Another reason is that the perishable products are sold mostly in unorganized sector. These small street vendors, they are involved in sale and resale of perishable products. There is lack of economy of a scale. See, when you have to transport 100 kg or 5,000 kg of any produce, obviously the cost of transportation, the cost of selling is going to be less. If you have to transport only say 20 kg, only 15 kg, the cost of transportation on all other handling charges, etc., it increases. So it is added to the cost of the consumer. Okay. So that's why also the farmers get less money in terms of perishable products. And this high wastage and low cold storage facility is also the reason for high inflation in perishable products, apart from the reasons that we have already written. Clear?
Sir, marketing facilities also plays a role in
Marketing facility mean?
accessibility to markets.
Hmm.
That nearer to these production areas.
Hmm.
This they they're not easily perishable.
You are saying that the since the uh, accessibility to market is not there, that's why the wastage is more. Huh, yeah. That's also the reason why there is high wastage. So usually it happens that in the nearby areas, the prices of fruits and vegetable is very less. But as you move away, the prices are very high. In villages, for example, we have fruits and vegetable at throwaway prices. Whereas in urban areas, the prices are very high. But incidentally, the same is not true for Delhi. I mean, I have personally witnessed that the prices in Delhi are comparable to the prices in my city in Patna or in Jahanabad. Because Delhi being such a huge market, I mean, from all four corners of Delhi, the goods and services reaches there. A lot many people are this one term we have studied, truck farming. Okay, a lot many people are producing only goods and services to be sold in Delhi. So in Delhi, you get all the fruits all the time and at relatively, I'm using the word relative, ठीक है, relatively reasonable rate. ठीक है. As compared to other relatively tier 2 cities, for example, in Patna, I have witnessed that the prices are relatively higher because because of again the same reason, linkage to the other producing areas is not as good for Patna or Lucknow or those cities as compared to Delhi. Delhi is well connected to all the markets, to all the producing areas. So yes, if we develop good connectivity, then also inflation would be controlled. That's also true. Next topic that we are going to see is agriculture credit in our country. See, this topic is very much linked to the topic that we studied yesterday, that is financial inclusion. Not yesterday, but 2 days before that. When we were studying inclusive growth, we studied financial inclusion. Financial inclusion, one aspect is agriculture credit, because credit is the part of inclusion. So probably there would not be any doubt in anyone of us mind that there should be more agriculture credit or not. Should farmer, agriculture credit is the amount of loan being taken by farmer. So should this ratio be high or low? Which is good? Why? Huh? Why?
Protects from the money lending.
Good point. What's your point?
They also equally they get challenges in repayment.
Hmm?
They face challenges in repaying that loan if they get lost.
Hmm.
They will face
Hmm. So this is, normal thinking, normal our societal thinking. Indian society thinks this way only, that you should not take loan. You should avoid taking loan. But economy teacher always prefer loan. Otherwise, how will there be economy? And maybe I have told you earlier also that in India, the total credit to GDP ratio is around 60%. Whereas in European countries or USA, this ratio is around 150%. Okay. Their life runs on credit only. If they have to buy anything, they buy on credit card. Okay. So, I mean, this is considered good. Maybe 150% is a bit too much, but Indian government is also aiming to increase its credit to GDP ratio. Today, see, one more thing is there. What is our society is suggesting is that we should not take loan for consumption purposes. But actually, this is getting extended to other arena also, where we are not taking loan even for investment purposes. Like most of the Indian youths are looking for job. Everyone has an idea that we can do this kind of business, but no one is doing business. They are looking for job. Why? Because we do not have money. We are thinking that at some point of time, when we will have money, then we will implement this idea. By that time, the idea would be implemented by someone else. So entrepreneurship is restricted in India because we do not have the tendency to take money and do the investment. And the same is true for, same is not exactly true for agriculture sector, because in agriculture sector, farmers are not getting loan either. It is difficult for farmers to get loan also. So first we will write what are the benefits of increased agriculture credit. So see, agriculture is a kind of business, right? To do business, you need money in the beginning. You do investment. Investment is in the form of input goods, fertilizer, seed, etc. They have to buy. In India, one of the reason for reduced agriculture productivity is low seed replacement ratio. What is this seed replacement ratio? So this is the frequency at which farmers are using fresh seeds in their farm. So normally what happens that whatever you grow in your field, you can use the seeds produced by the same plant next year. Okay, so a lot many farmers do this. They will simply keep a part of the paddy that they have produced to be used as seed next year. This is a good idea. But after one or two cycle, the germination rate reduces or the productivity goes down in these kind of seed, because these are hybrid seeds. Okay, the hybrid seeds loses its some of the productivity in every subsequent generation. Okay, so that's why it is recommended that every 2-3 years farmers should be using fresh seeds. But fresh seed is definitely going to be costly. So to cut the cost, and since farmers do not have the money at the beginning, they are going through their traditional methods, and ultimately it is leading to loss for the economy. I mean, obviously it is loss for the farmer, their productivity is going down, it is loss for the economy also. Next is that they can do some long-term investment. If they have some additional money, they can buy tractor, etc. They can do the field leveling. They can have irrigation facilities, and then new technology adoption can also possible. But new technology is always costly. It is kind of investment. That kind of money farmers often lack. So if loan is easily available, they can. This is something we have already told you. Usually, credit is linked with insurance product also, crop insurance. those farmers who take credit, institutional credit, they are more chances to go for crop insurance. Because of this reason, they are relatively safe from weather shocks or loss of crop. It promotes financial inclusion, and obviously it will empower a small and marginal farmer. If there is any doubt in any point, please let me know. So what are the issues? Obviously, agriculture credit should be high. There are issues also. What are the issues in agriculture credit in our country?
They may not be able to repay.
They're not able to repay. It means there is high NPA. That's actually factually not correct. And NPA in agricultural loan is relatively low as compared to commercial loan. Vijay Mallya, one person is running away. I mean, this is something that you must have seen. See, one Vijay Mallya goes away, 9,000 crore rupees gone. The average amount of loan that farmers take is around 1 lakh or 2 lakh. Now you can do the calculation. Even if we take the simple calculation, 9,000 crore divided by 2 lakh, how many farmers loan can be waived off in this one loan? So that's why, because of the size of the loan being small, overall in the economy, the NPA problem is not that much. But yes, one of the points we will write, but not the first point. Yeah, that's the problem. Farm loan waiver creates a tendency among the farmers not to pay, even if they can. This is a tendency that has grown among farmers. Especially in election year, no one pays the loan. They keep betting that before election, some some goodies will come from the government. It seems that most of you belong to agriculture family. Is it the case? No? Chalo. Query batao. What else are the problems? How many of you belong to agricultural family? Two. Okay. Three. Have you ever been to the field? Yes? No. Okay. Chalo. What else are the problem? Yeah, there is what collateral. There is lack of collateral with the farmers. So that's why they don't get loan, because bank will ask for collateral. What else?
KYC norms.
Yeah, so probably what you are saying is that there is a lot of bureaucratic red tapeism involved. You want loan, first I want papers. Show me the papers.
Less banks in rural areas.
Hmm?
Less number of banks in rural areas.
Yeah, less bank, what you say? Bank's accessibility. That's also a problem. Hmm. What else? So when we are talking of,
Awareness about the loans.
yeah, that's the biggest problem. First of all, farmer will not know where to go. So rather than going to the bank, he will go to a money lender. This we can write as dependency on non-institutional credit. In fact, as per the RBI data, 60% of total loan in agriculture sector is still from the unorganized sector. That is money lender, informal, etc. Second is that if you are farmer, whether you will be able to get loan will depend on the size of your land. If you are a large farmer, there are high chances that you will get the loan. If you are a small farmer, the bank may turn you down. Okay, so a small and marginal farmer, they find it difficult to get loan from banks. Only 47.3% of all credit goes to a small and marginal farmer. Whereas, do you know this share of a small and marginal farmer in total farmers of our country? 86%. 86% of total farmers are in the category of a small and marginal farmer in our country. So 86% of the loans should also have gone to them. But actually only 47% of the all credit goes to them. This is natural. Then whether you will get loan or not, it also depends on where you are doing the farming. If you are doing farming in Andhra Pradesh, Telangana, Karnataka, Tamil Nadu, Kerala, these are the 5 states where farmers are getting more loan. The farmers in the eastern India, northeastern India, they are not getting loan. There is regional disparity as well. So these 5 state farmers account for the farmers in 5 southern states account for 48% of total credit, whereas these states account for only 17% of total cropped area. It is also written as gross cropped area. So the farmers in these states, they are getting 48% of the total credit, whereas these states are accounting for only 17% of gross cropped area. See, the problem is not with these states. The problem is with other states. Okay, so do not give this advice that see the loans should not be given here. Here they are doing the good thing, but the other states are not able to replicate the same thing. Then there is red tapeism. Paper, show us the paper, and people are saying that paper nahi dikhayenge, will not show you the paper. Then the banks are also not complying with the lending targets. Like priority sector lending target is there for agriculture. Most of the banks do not meet their priority sector lending targets. What do they do? I mean, is there any penalty if a bank does not meet the priority sector lending target? What happens? Have you heard of RIDF? So if a bank misses the priority sector lending target, this is called PSL shortfall. And this PSL shortfall, they have to deposit with RBI. Okay. RBI pays them interest rate, which is bank rate minus 2.5%. In fact, RBI does not pay any interest. This money, RBI is just an intermediary. RBI gives it to NABARD, SIDBI, etc. NABARD, SIDBI, NHB. So NABARD has made one fund named RIDF, Rural Infrastructure Development Fund. So NABARD further does lending under this fund. Okay, so for bank it is a loss that they are getting very less interest rate on this fund. So this is a kind of penalty that is imposed on the bank. And ultimately, all these institutions, NABARD, SIDBI, NHB, they do the lending in the field of priority sector only. Like RIDF is used, this fund is used for making rural infrastructure, which is a kind of priority sector. Okay. Then there is negative impact of loan waivers. We have already seen this, discussed it. And then the most important part, there is lack of financial literacy. What has government done to increase agriculture credit? Yes, priority sector lending targets. What else?
Bans in rural areas.
Yes, financial inclusion related initiative, all you can write. They are again, in a way, increasing the priority, agriculture credit as well. What else? What kind of bank? Is there any specialized bank?
Gramin banks.
Yes, regional rural bank, rural cooperative banks, right? Then government has started Kisan credit card scheme. Kisan Vikas Patra as such is, it is not aimed for, Kisan credit card is different than Vikas Patra. So Vikas Patra is an investment instrument. You can invest money in that. That is not increasing credit. That is a kind of PPF kind of thing. This S is capital. This scheme for financing of joint liability groups of tenant farmer has been started by NABARD. So NABARD is also doing some good work here and there. My ex organization. Any doubt you must ask.
In that scheme, did they ask for license?
Do you know what is joint liability group? JLG?
They're like,
Yes. Anyone would like to throw some light on JLG? What is joint liability group?
Even if one person failed to repay their loan, everybody will, rest of the people will share their loan.
Yes. Well, I'm impressed that you people are aware of this.
SHGs were the same.
Yeah, so SHG is something which was mostly used by women. Although the concept is not something that SHG should be only of women, but somehow it has so happened that women are forming more SHGs. Okay, so the idea was that for men also there should be some concept, and also SHG size should be around 20 members. Okay, so relatively larger size is there in case of SHGs. So the idea came that why can't we have a relatively small group? So joint liability group was there where it can be made a group of 4 people. So if 4 people, they are coming and they are simply saying without any collateral, they are saying that they are taking joint liability for the loan taken by any person. So suppose you 4 people come together to the bank, take the loan, you are simply saying that if I mean, loan may be taken by one person. Maybe Salima is taking the loan. But even if she fails, the liability would be with all the four people. They will have to pay the loan. And it has been seen that in such a scenario, the NPA is very less. Because all the four people are liable now, so they keep a check on the person who has taken the loan. If he does anything wrong, the same concept that was there with SHG. If anyone does anything wrong, everyone is going to put a check on him. That why are you doing anything wrong? Why? How are we going to repay the money? So this way, this system is working, and here also the loan is giving collateral free to some extent only. Obviously, large amount of loan is not given collateral free, but up to certain limit, the loan is given collateral free. What is this PAX? PACS? Cooperative Society. Primary Agriculture Cooperative Society. ठीक है? Very. They will run away. There will be some fraud. But this is something statistically we have seen. I mean, obviously, pilot project was first run that the chances of fraud reduces. Fraud. See here, one more thing is there that all the four people will be in the same locality. They will be doing similar kind of activity. So all the four will disappear. The chances are less, but obviously they can disappear. But the chance of disappearing one person is much higher than chance of disappearing four person, four families. That would be declared as an NPA. So how can we increase? This is the last point that we have to discuss in today's class. How can we increase agriculture credit? What should be done? Yeah, spread awareness.
Banks in rural areas, accessibility of bank facilities.
Okay, more bank branches. For that also RBI has started this. RBI has made a rule of 3:1. So if any bank has to open any new branch, the permission for opening the branch is taken only in the ratio of 3:1, 3 in the rural areas, then 1 in the urban areas. Because 70% of population is living in rural areas. So you should, if you are planning to open a branch, you should open 3 branches in rural areas. Okay. Although the definition of rural and urban area is very different from our common definition. The definition of RBI is that everywhere where the population is less than 1 lakh, they are considering it as rural area. More than 1 lakh population, they are considering as urban area. But still, this is something which is done by RBI. Jaldi. I'm getting a call to end the class. Very quickly. So, financial literacy, we have seen. Simplify the lending process. Bureaucracy, red tapeism. So, all the problems that we have seen, you have to simply look at the problems and you will get the solution. Then, technology. The technology you should always think. So, two things you should always think. One, whether we can spread awareness. Okay. And second, whether we can use big data, cloud computing, nanotechnology, all these big birds, artificial intelligence. This drone has also come. So look at all this technology. Which of these are applicable in our answer? Okay. Then there is one more thing that you can say, that there is always this problem of collateral when we talk of lending. So if government could provide, for example, in education sector, government provides collateral free loan, government gives guarantee for education loan. The same can be done in agriculture sector also. Government backed credit guarantee scheme could be there. We should promote crop insurance. The cooperative banks network need to be strengthened. See, the reason why in the southern states the agriculture credit was higher than the eastern and northeastern state is because of the cooperative bank network. This network is very strong in southern state, which is almost absent. I mean, in my region in Bihar, there is no cooperative bank at all. I have not seen any cooperative bank till I migrated out of my town. Okay, so in my childhood, I was not aware of any such thing as cooperative bank. Whereas if you go to any, like in Himachal Pradesh, when I was there working in Nabad, there is almost a cooperative bank in all a small town. Even if there is a small town, you will have a cooperative bank over there, cooperative bank branch. We need to encourage the microfinance and joint liability group. So these terms are important. Everyone is, I mean, I think you must be aware of all these points. There's nothing new. But only thing is that whether you are able to recall them at the time of exam or not. So that's why it is important to write them down at one place. We have discussed all this. Loan waiver is not a good thing. The government should think of schemes like PM Kisan where DBT can be given. Government should think of those initiatives like input subsidy, fertilizer subsidy, and all those. Government should not go for loan waivers because this has a cyclical impact. Keep writing. Cyclical impact is that loan may be waived today, but the impact would be felt even next year, next to next year, because the bank would not be willing to give you the loan again. If you do not have the tendency to repay it, you will not get the loan in the next year. So this is a vicious cycle. You are expecting loan to be waived, that's why you are not paying it. Since you are not paying it, bank is not giving you any further loan. So in the long run, ultimately it's the loss of the farmer only. So that's why for the government, it is not a prudent policy. The next thing is that most of the loan, as we have seen, that is taken by large farmers. A small and marginal farmers are only taking around 47% of the loan. So majority of the benefit of loan waiver is accrued by the large farmers, not the small and marginal farmer. Especially tenant farmers, they do not benefit. And actual needy is the tenant farmer. So that's why this is not a prudent policy. So that's all that I have to cover. Thank you very much for joining this class. We shall see you again, not tomorrow, on Monday. So on Monday, we shall have the next class where we shall cover the fiscal policy. So those basic tools of fiscal policy and the definition of fiscal deficit, etc. I would expect you to come after revising those terms. Okay? See you in the next class. Thank you.